Good morning, good evening, good afternoon, wherever you are, whatever time you're watching this from. Super excited that you're watching this trading video today. My name is Leon Brown. I'm a trader, cryptocurrency investor, teacher, mentor, coach, whatever you want to call me. I'm a networker, relationship builder, and all around optimist, and super excited to be bringing you this video. And I hope I'm going to add some value to your trading experience today. I want to cover this off in probably 15 minutes if I can, maybe even 10 if we can keep it that short. And I really want to look at, a couple phrases which you're going to need to know with regards to your trading. I was talking to somebody that I'm working with, and these are some of the phrases that we really wanted to work on and understand completely. You're going to need to understand the trend and how to identify it. You are going to need to understand market structure, what it is. Very similar. You won't be able to really identify the trend if you're not looking closely at the market structure. STRUCTURE. Also, we're going to need to understand what the trading range is. Very important. Trading range. It would be help if I could type. And lastly, I want to show you what a break of structure is. All right, and we put this in brackets, BOS. Okay. So that is what we're going to be looking at today. We could even make that bigger so it's clear. All right, these are the 4 things that we're going to try and look at today. Trend. Get through these fairly quickly. This is meant to be an introduction, not a fully comprehensive explanation of all of these, but I want to let you know I'm available for anybody who wants to understand these in greater depth following this very, very short video. I've got my eye on the time. What are we looking at when we talk about structure? Well, we do know that the market never ever goes in a straight line. Never ever ever goes in a straight line. The market will take a move up, and then it will take what we call a retracement, which is a move down, and then another move up. Usually this move up is often the fastest and the strongest and the longest. Then we see another move down. It could be anywhere down to here. Right? We see another move down, and we see another move to complete that. All right, let's just start with that for now. This is a typical uptrend, and it is consisted of what we would call higher highs and higher lows. Now, this may sound basic, and I hope that you understand it, but what we're going to see later on when we look at the chart is that there's a really important time when to mark in your higher highs and your higher lows. If I was to flip this on its head using a really cool tool of mine, in a downtrend, we see a very, very similar situation where we see an impulse. We call this one an impulse in a downtrend. The correction this time, or the retracement, is an upwards correction or retracement. We see a move. Some people call this leg 3, which is the fastest of the moves, the fastest and the longest of the legs. Then we see another upwards retracement and a continuation and a finalization of that move. It's the same thing in reverse, and this on a downtrend is marked by lower highs and lower lows. We're going to get into that a little bit later on. But something super interesting happens. How do I put my chart back around the other way? Something super interesting happens when we actually look inside the impulse and when we look inside the retracement. Because what you will see is that inside there, this is really important, inside here, if I can find the right thing, you're going to see little upwards moves and downwards moves, impulses and retracements inside the retracement itself. And inside the impulse, you'll see impulses and a retracement. It will be like this, right? And counting those and being able to mark those is what's going to separate and make the difference in your trading journey, especially when you're trying to identify the market structure. All right, let's look at this really, really simply. We know that if we mark out a higher high, let me put the text on right here and make this a bit smaller. If we mark up a higher, that's not what we want. Mark up a higher high, followed by a higher low, followed by a higher high and a higher low. We can finish off with a higher high up here. That sequence, HH and HL, tells us that we are in an uptrend. That is how you do that. And I'm going to show you soon how to actually mark that out on your chart. All right. Let me just do that. So this tells us that we are in an uptrend. If we swap it around the other way, we're not having higher highs and higher lows. Now we've got lower highs up here because this high is lower than this one. Really, we could put this as swing high. Let me do that. Swing high. That will make it clearer in a downtrend. Then this now becomes a lower low. All right. This one becomes a lower high. This one becomes a lower low. And we finish off, we'll call this lower low as well. But really importantly, there is a time to mark out these higher highs and lower lows. And that's what I want to show you on the chart. And that is when we're really going to talk about market structure. And actually, that's when we're going to talk about trading range. All right, so let's put this back. We'll delete these off because they are the other way around now. All right. So first of all, let me write this out so it's very, very clear. Your trend identified by series of higher highs and higher lows, or lower highs and lower lows. Real simple. You're going to be able to mark those on your chart. Okay, now it's getting too big. The more writing you do, it gets a little bit big. Okay, cool. Okay, that is your trend. Now let's take a little look at the let's take a little bit of a look at the market structure. Now to do this, I'm actually going to roll down onto the actual chart itself, which is below. And for this example, we're going to look at the Australian dollar against the US dollar. We call it Aussie dollar, is the kind of like the term that we would use on the trading floor. All right, so Aussie dollar, that's what we're looking at. Some people call it AU. The long name is Australian dollar against the US dollar, but Aussie dollar is a nice short way to be able to say it. All right, this is what we're looking at really simply. We've got the 1 day chart here. Maybe if we look at the 4-hour chart, we might see something a little bit more intricate that we can look at. Just 1 second. I want to go all the way to the low. All right, there we go. We're going to start from here. So we would call this, and this is how we're going to mark our market structure. In fact, I'm going to take out some of this data so that we can actually treat the chart as though it was happening live. This is really important, and we call this back testing. Back testing allows you to go back in time and respond to the chart as though it was happening live. All right. But the great thing is you've got all of the data there. So now you're able to see whether the information that you extrapolated and the decisions that you made would have been accurate by going back in time. So I'm going to take out the information. Let's take it out from here. All right. So what are we looking at right now? We are back in time, and we are looking at the low, which happened around the middle of March last year, and we've seen a little bit of a peak and start of a reversal. So let me show you how I mark up these charts just on this time frame. What do I mean by time frame? I mean that every single candle on this chart is a 4-hour period of time. Every single candle on that chart is a 4-hour period of time. All right, so let's look at this now. We would mark this as swing low, because that's where the low started. Not swing low, swing low. Mark that swing low because that's where the low has started, and then we start to move. Now, if we're looking in real detail, yes, you can see like a higher high here, and you can see a higher low. You can see a higher high and a higher low. Yes, absolutely. But we're not going to go in that much detail right now. That is the right thing to do if you're actually trying to find a trade on the more shorter term timeframes. But right now, we're just looking at the bigger structure because there's actually almost a year's worth of data to actually back test here. So let's see how quickly we can get through it. Okay, So from the swing low, we've got a, what we would call here, a higher high. And let's put in HH there. That is a higher high. Now, very importantly, at the point where you've got a higher high, I'm going to show why that is a higher high in a second. At the point where you've got a higher high, that creates for you a range. So I had as one of the things that we were talking about, trading range. The trading range is going to be from the close or the open, from the, let's say from the body if you're using candles. If you're using line charts, you can just take it from where the line chart is. But the trading range is going to go from the body at the swing low to the body at the reversal. All right, so there's, and I use a trend line. I just go like this, and I go to the body there, and that is my immediate trading range. That's all I'm looking at. And why is that important? Because it gives me a concentrated area to look at when I'm trading. The reason why this is so important is because when I'm trading, I don't want to be looking all over the place. I just want to be looking within a concentrated area. And identifying my trading range means that right now, the only thing I have to consider is anything that sits within this box. That's all I have to consider. All right, anything that sits inside that area here, that's all I'm looking at right now. That is my trading range. But obviously, trading ranges change, right? Trading ranges, try saying that fast. Trading ranges changed. So what we're going to do, we're going to play this out. That's a great thing about backtesting. And we're going to look at when the trading range changes, okay? We're going to look at when the trading range changes. So if we play this out, what we're waiting for is we are waiting for a break of this structure. There's the word. That was the fourth thing we're going to look at today, a break of the structure. So we want to see a break on the way. I got you the wrong chart, sorry. We either want to see a break, where's my arrow? Lower, there's a break of structure because we've broken below the close where the range has been identified. So we either want to see a break lower, or as we know, because we saw the chart before, we're going to see a break higher above this structure here, okay? So let's do that. Let's play out. Let's see how it happens. Okay, boom. Once we get that clean break of structure, what we're looking for, importantly, is we're looking for a shorter term break of structure downwards to tell us that we've reached a peak. All right, so let's see when it starts to turn downwards and then we've reached a peak. There you go. That's a clear enough move. All right, that's a clear enough move to identify a change in structure. All right, that's a clear enough move to identify a change in structure. So what do we do at this point? What do we do? Well, we change our trading range. Really important. And as we get a break of structure, at that point, we know we've made a new higher high. All right, let's put that higher high in first. We know we've made a new higher high. And then we can identify this area here as the higher low. This is really good, okay? That's when, really important. So on this particular time frame, we do not want to identify all of the high. Look, there's another higher low. Yes, could be another one right above it here, higher high, higher low. We don't want to identify every single one, because what happens then is that things get a little bit confusing. So we're trying to identify the higher highs and the higher lows on the main structure, all right, on the main structure. So once we've identified the new higher high, then importantly, then you put in your higher low, and also you move the range. Okay, let's move the range. Boom, here we go. The range is at the body there, and then it's at the body. The body and the wick on this one are basically the same. So that is our new trading range. Now, I'm not talking about what to do within the trading range, how to identify your trades. That is a different thing. All right, that is obviously the most important, because that's how we're going to make our money, hopefully, if we do the right things. But really what I'm talking about now is just understanding how to mark the chart. Okay, what is the trend? What is the market structure? What is the trading range? And where is the break of structure? Now, importantly, we can identify, let me put the break of structure on the chart. I'll go back a bit. I'll take a step back. We were in this range before. We were in that range before from there. So I'm hoping now that everybody can see that the break of structure happens when the range is broken, right? When the range is broken, that's when you're going to put in your break of structure. Okay, so we can move that. And I always do this with a little, I always put my break of structure in with a nice little arrow. So I can say from here to across to there, that point there is when the structure gets broken, right? Maybe some people like to do it at the wicks. Either one is fine, but the structure is broken around there. And we can go into our presets and do boom, break of structure. Okay, so now we've identified the trend. We're in an uptrend predominantly. We've identified a swing low, a higher high. We've identified a higher low. We've identified a break of structure, which creates a higher high and a new trading range, right? Rewind that 15 seconds and watch that again, all right? So we've seen a swing low, we've seen a higher high. We've seen a break of the structure, which creates a higher high, therefore a new lower low, and also a new trading range. All right, really, really important. So let's play this out and we do the same thing over and over again. I'm not talking about how to identify trades here. Yeah, we do that on another 15-minute session. Not talking about how to identify trades. I'm just talking about how to identify your range and your breaks of structure. Let's do that again, see what happens. Where does it go? Are we breaking the structure lower? Okay, or are we breaking the structure higher? Well, we seem to be in a fairly good uptrend at the moment. Likelihood, if you see this, is we're going to continue the trend. All right, let's see. Let's play it out. And we know what happens anyway because we've seen this chart before. Okay, boom, there you go. It's broken that structure and we got a nice reversal. Okay, it's broken that structure and we got a nice reversal. On the sell side, let's see. On the sell side, there is the sell side break of structure. The price comes down and breaks the structure here. Okay, so that's when we know we've made another higher high. Let's copy that. And that's when we know we've made another higher low. And that can go in there. Then what do? We create a new trading range. It just keeps on going like this, right? It just keeps on going like that. There are ways to find trades once you've identified the range. I said it for the third time. That's really not the point right now. In every skill or in every discipline, there are fundamentals which you just have to practice. Like I'm a golfer, that's what I love to do. So when I go down to the driving range, it's like there are things which I practice which are not necessarily banging the ball as far as I possibly can. It's just small little drills which help me put my hands in the right place, help me put my arms in the right place, get everything on the right plane. There's drills that you can do. Trading is exactly the same. There's certain drills which I highly recommend you just do over and over and over again. And marking up a chart with higher highs and higher lows, break of structure, new trading range is a brilliant thing to do. You could be lower highs and lower lows, break of structure, new trading range if you're in a downtrend. Highly, highly recommend you to do that. Okay, we've got a new break of structure. That break of structure is up here. Hope everybody can see that nice and clear. Okay, hope everyone can see that nice and clear. So we could just continue just to play this out and keep on doing this thing all the way through, but there's no real need for me to go through and do that all the way through with you today. This is how to do it. And by doing that, unless you're really looking at these short times, look, you could label, yes, higher high, higher low, higher high, higher low. Yes, you could. You could go through and do all of that, but then your chart will get too busy and too confusing, all right? If you want to, let me show you what you could do. You could highlight this area. And if you're looking for a trade in that area, so that's too much, sorry. You could highlight that area and then zoom in. All right, and if you do that, let's do that. Okay, well, of course, now if you wanted to go down onto the lower time frames, yeah, then of course, now you can do the same thing on here. If we're in this is a period of what, 21st of April 2020 to, where are we, to about the 30th of April, about the 30th of April. So you've got a 10-day stretch there. And absolutely there are trades to do within that 10-day stretch. 100% there are trades to do. We can delete the box and we can show you, right? You can see, let me mark them off. High. Of course, you've got your higher lows, right? But when we're looking at the longer term trend, we don't want to go through and name all of these higher highs and higher lows, right? not when we're back testing. We don't want to go through and do all of that on the longer time frames because it gets too confusing and too busy. All right, so yes, you could. And if you are live, then yeah, if you're live trading, if you're trying to find a trade today, then you should be looking at the shorter time frames anyway. But really what we're talking about here is identifying the longer term trading ranges that you're in. And it will help you to narrow down your focus so that you can focus on these shorter time frame market structures and identify your trade from there. So do you know what? Could keep on going with that, but not super necessary, to be honest. I think that is a clear explanation of how to find your trend, your higher highs and your higher lows, your breaks of structure, and your trading range. Let's just do one more. Let's do one more. Let's see what happens. So right now we're in this trading range, and that's the area that we're looking for trades in. That is the area that we'd be looking for trades in. We'll come to how to do that later on. But let's see. Boom. Okay. What do we do? Do we break lower or do we break higher? So you look at that. We've stayed in this range for quite a while. We're still in that range, right? And we should be looking for trades in that range while we are there, right? While we're inside that range, then we should be looking for trades in that range. All right. Let's see what happens. We know that, again, we've seen the chart. We know that we break higher. Let's see. All right, so we're still in that range. That's a further, how many days? We're still in that range, capped by this higher high. The wick, it doesn't count as a change of range. Really important. When you're measuring the positions to get your trade in, we use Fibonacci to do that. Check the video that's actually before this on the Facebook page. You do take the measurements of your Fibonacci from the wicks because that's the full move of that time frame. But when you're looking for the range, then just keep it to the bodies, and that keeps it nice and simple. It feels like we're going to break. There you go. Right, there's a break. Is it a good break? Yeah. Okay, something interesting happens in here. It just, look at that. It just flies off. Now what we're doing is we're waiting for a very clean reversal before we mark up the higher high, right? We could mark this as a higher high and a new range, absolutely, but then it gets broken immediately. So let's look for a very strong reversal before we mark off the new higher high. Could be, that would be enough of one. Right? I would say that would be enough of a reversal. Then you mark your higher high, your higher low, and you create a new trading range. There you go, higher high, put that there. Higher low, we will put that here. New high low, you could maybe put it here. Either one of these, the one that breaks outside of the range, and then boom. Now you've got your new trading range. All right. So guys, I'm going to leave it there for now. We could play this out, see exactly what happens, move this all the way through. Yes, we could. Let's delete that and delete that, see what happens with this range. We know it moves higher. But I strongly encourage you to use this back testing technique. It is a feature that sits inside TradingView. This package on TradingView costs about £10 a month. It's the pro version. It costs about £10 a month. But for me personally, just having access to the replay tool, being able to back test a year, 2 years, 3 years, 5 years is super, all right? It's worth the price of admission just for the replay tool alone, plus all the other stuff that comes with it. So I highly encourage you to do your back testing. Highly encourage you to mark up charts as a drill. Mark it up as a drill. We did that. Let me just finalize this and do it properly. The breakup structure on this one was here. There's the structure. It gets broken. There you go. And so we can, in which case yeah, that's fine. This is either one of these, but let's go with this one here, where the actual break starts. So that will be our higher low, and that will be our higher high from there. And we just do the whole thing again, mark the range. Next video I'll do will probably be how to find trades once you've identified your trading range. Of course, that's what you want to know. You're going to have to stay tuned and stay in touch with this site to see the next part and the next installment of how to find trades once you have identified your trading range. So what we looked at today, just to recap, we looked at trend. Let me make this bigger. We looked at trend. Oh man, I did that again. Looked at trend, looked at market structure. There's more to this, trust me. This is like high level. We looked at trading range. We looked at trading range, and finally, we looked at break. What a break of structure. This is really important because the break of structure will tell you when we're moving into a new trading range. All right, shutting down. Hope that was helpful for you. You know how to get in touch. Comment on this video, like, share, ask me some questions, get in touch, feel free. Hope that was useful, and we will catch you on the next one. Take care, everyone. See you soon.